Hi everybody, it's Jack and I want to bring you a market update video today. It's 5/10 Friday. Now what I like to do is before I use a trading strategy, I like to make sure I'm using a market-driven approach. That way you're not just trying to force the same strategy into different market conditions. You always want to plan your trades in the same direction as the broad market. So if it's bullish, we're going to find bullish trades. If it's bearish, we're going to find bearish trades. So the way we determine what is the broad market condition is look at SPY. That's an ETF that tracks the S&P 500. And you can see it was in a really great bull trend since November. That died off here in April. Now we're back up to bullish, but barely bullish. And we're not as bullish as we were. It's not making new highs, right? It's got to break this 525 level to make a new high, but it is bullish. And then we move on to DIA. That's only 30 stocks in the Dow Jones. But we look at that also. That's a big market indicator. And this is now bullish. It's not as bullish as it was, but it's over all three trend points, so that makes it bullish. And then we look at QQQ. And that's also bullish. Again, not as bullish as it was. It's not as high as it was. And it's not making new highs, but it's definitely not as weak as we saw down here. Now I want to show you another thing. This is an indicator that I use that no one else uses. And what I like to do is look at the number of new highs versus new lows, in addition to looking at these indexes. And that'll tell you really the state of a market condition as well. Now, not just new highs. That's too broad. So what I do is I use a list of stocks that have made a new high, but they're also over $20 a share. They trade 500 shares of average daily volume, trade on a major exchange, have options, and a few other criteria. But I want to show you something here that most people don't look at. So this is the list of stocks that have hit the new high, that we'll find some in here that are in a good trend to buy or trade. But just this number here, this is what we got here. Look at all these. Okay, that's a good list. Now, let's look at the downside. You see that, like 13, 14 stocks making new lows compared to whatever number this is. It's a lot, maybe 3 times the number of stocks making new highs that are versus making new lows. Now, we got that all set up, so if the market was bearish, we'd be picking stocks out of the down list, but since it's in an uptrend, we're going to be picking stocks out of this trending higher list. I like this one. I don't like that one. Anytime you see a gap, that's kind of a warning sign. Amazon's looking pretty good. It's trying to make a new high. I like Amazon right here. That's a good trend. And I just go through this list to find the most perfect trend I can find. And I'm just going to buy that stock. And I'm going to put in 2 orders, 1 order above the stock, 1 order below it. And have it one cancels the other. Boy, that thing really popped. Eat. That's a really nice trend right there in GoDaddy. Beautiful trend there in Levi. Really nice. Look at that. That's really nice. Very volatile, but a pretty good trend in MTB. It's not loaded with tech stocks, you'll notice. It's very interesting. That's a pretty good trend. Really beautiful trend in VRT. That is just really as good as it gets. So that's how I plan it. Now, if I was going to buy VRT right here, I already own this stock, just so you know. But if I were to buy it at 97, I'd put a sell order 7% below my purchase price and a sell order 15, 16, 17% above my purchase price. Now, if the stock runs higher, which I think it will, and it hits my sell order, I'll lock in a profit, and that order, once that's executed, that order will cancel the order I had below. It's called one cancels other, right? or what I call it an exit collar, OCO. One cancels other. Now, if you can't do that, just put the stop loss 7% below your purchase price. You know, if you just do that, you'll save yourself a lot of headache and a lot of money. I see too many times people get into a stock and just watch it go down 40% and do nothing. Right? Don't ever do that. Always manage your risk. So if you can put in an OCO, then you could be out doing whatever you want, taking a nap. You could be in a coma, and you're still going to get out of your trade, right? But if you can't do it, just put that one in below there, right? And you'll be set. Now, this is a great trade. It's a great trading idea, and I hope you have a great week.